Hey, what's up, YouTube? Today, let's talk about a balanced price range, which is a BPR. Today, we're talking about mastering the balanced price range. It's an ICT concept, it's a very key concept, so I want you to be keen. So, a BPR happens when we move up or down. We have a fair value gap. While moving up, we leave a fair value gap. As you can see here, I've already taught about fair value gaps, and tap in into a higher time frame premium array. Then we reverse back and form another fair value gap, which now in this case becomes a CB. Here we formed something called a BC, buy side inefficiency, buy side imbalance, sell side inefficiency. This is the BC I'm talking about. And as you can see, while moving downwards, we also formed another CB. So this becomes, let me mark for you so that guys you won't get confused. This is our BC and this becomes our CB. That's all. Now this is our BC, this is our CB. So when this happens and these two fair value gap are parallel to each other, this forms our BPR. So when we leave a fair value gap on the way up, then tap into a higher time frame premium array and move downwards, leaving a parallel fair value gap to the first one. Which one is this? Now we form something called a balance price range. So we don't expect the last fair value gap, which is this, to get filled. We don't need a market structure shift or for us to call it a BPR. We just need the parallel fair value gaps. When in line with the higher time frame narrative, the BPR is just one of the strongest premium or PD arrays. So another thing, a BPR usually stops price at the midpoint if bullish, or the low or the midpoint if bearish. Hope you've gotten that. The middle point, let me mark, which is this. Let me highlight the middle. Let, let me highlight for you the middle point of a BPR. I'm talking about this area here. The middle point of a BPR is called equilibrium. That becomes our equilibrium. This place here, the middle point, as you can see, becomes our BPR equilibrium. When we get a candle closure, as you can see, when we get a candle closure beyond the equilibrium of the BPR, we consider there is a money intervention and we might want to abort the trade idea. Hope you've gotten. When we get a candle closure at the midpoint, means there is intervention and we do not consider that balance price range. We do not want to see the extreme, which is the 50% of the quadrant of which the BPR being revisited or closed beyond. There are two types of BPR. There is the bearish one and there is the, now this is our bearish BPR. It's just the BC that later becomes rebalanced into CB. Now this is a bearish BPR. For it to be valid, when we get both candle closed below the BC, as you can see, this candle closed below the BC and close below and print a CB. Now this becomes our valid bearish BPR. Same to the bullish BPR and vice versa. Let me show you something. Now in this case, this becomes our bullish. This becomes our bullish BPR. Now this will become CB, this will become BC. Hope you've gotten that, guys. Thank you.